Hello everybody, Joseph Smith at Travel Tax. Today is March 29th, 2020. A lot has happened in the last 2 weeks as we continue both in our nation and the world to deal with the COVID pandemic that has come upon us. A lot of tax legislation has been passed, as well as there have been numerous changes to filing deadlines. And in just a moment, I'm going to make a humble attempt to try to outline this as quickly and concisely as I can. This might be a longer video, so bear with me. And I just recently put it all together on an outline format to try to keep it flowing along rather smoothly. Now, before we begin, as many of you know, I spent 25 years as a respiratory therapist, a number of years as a traveler. I can only imagine what danger some of you are facing as you are on the front lines of dealing with the patients that are suffering from the COVID virus. And not only in healthcare, but first responders. And I want you to know that our staff is in prayer for your safety, and we will do anything we can on our end to help you through this transition as well. So for my colleagues in healthcare, I admire you for the continual battle. So let's get on with this. I'm going to outline. I'm outlining this between 4 different groups: individuals that are in collections, that are dealing with past debts, tax debts; then self-employed independent contractors; and then very briefly corporate filers. The first thing that has probably occurred before any of this was the extension of the filing and payment deadlines. The federal government, under the direction of the Trump administration, has extended both the payment and the filing deadline for 2019 tax returns to July 15th. Now, the federal government does not dictate what the states do. And our firm is a multi-state practice, and you can imagine with 42 different states making up their own rules, what confusion that can bring. Most of the states, thankfully, have adopted the federal guidelines, but there are a few that have not, or some that are still debating their new bills. On our blog, and then tomorrow on our website, there will be a PDF, PDF formatted rundown chart that shows what the current state deadlines for both filing and payment are. And as this unfolds, make sure you subscribe to our blog as well as our YouTube video channel, so you can get first updates of whenever we add new material or change it. But for right now, most people have till July 15th to both file and pay for the 2019 return. Now, some of you are required to make estimated payments on a quarterly basis. And that next one is also due on April 15th, but that payment has also been extended to July 15th. Now, a twist to this: the second quarter payment is due June 15th. As of right now, nothing has been changed with that. I would not be surprised, though, as events continue to unfold, that June 15th deadline would be moved up maybe to July or even beyond that. The next big piece of tax legislation, and we are already getting questions about this, is the stimulus payment. The big picture here: every individual will get $1,200, and every dependent will get the dependent will qualify for a $500 payment. So, for example, if you're married filing jointly with 2 kids, that's $2,400 plus $500 for each child, which makes for a $3,400 stimulus payment. Now, these stimulus payments are going to be based on your tax return. If you have filed for 2019, and remember you have till July 15th to do this, it will be based on the 2019 return. If you have not filed the 2019 return, it will be based on the 2018 return. If you have not filed either of those returns, you want to get this done very quickly, because, as I said, these stimulus payments are going to be based on the income that you have reported on that. Now, there is also a provision that has not been outlined very thoroughly yet, in that if you have a lower income year in 2020, if you have phased out because of previous returns showing a higher income, then there will be an additional credit up to the limit of the stimulus. That is continuing to unfold. Now, as you probably have figured out while I'm talking about this, there are income limitations. If you are a single filer, the stimulus package will begin to phase out after $75,000. If you're a joint filer, that's $150,000. And if you're head of household, and what head of household means, you are a single parent with a dependent, that phase out will begin around $112,500 of income. Now, whether or not it's based on 2018 or 19 due to income, mostly it's going to be the 2019 tax return. And how this is paid out is going to also be laid out in further guidance as it becomes available. Now, there's another set of provisions regarding student loans that are very interesting, and lots of our clients are still paying on student loans. If you have a federal student loan administered by the Department of Education, for the most part, there will be an interest suspension for 60 days. In other words, interest will not accrue. There is also an option to suspend your student loan payments for 60 days. And a number of the student loan websites outline how this can be done. But there is one other benefit that was tucked into the recent legislation that we should take note of. Employers are now able to give up to $5,250 as a tax-free payment to reduce your student loan principal. And we may very well see a number of employers do that. In other words, normally if you get some sort of student loan forgiveness, or it's paid for by an employer, that's normally taxable income. But under this legislation, there is a one-time exemption of that of $5,250. Some other provisions affecting individuals. Everybody on next year's tax return will have a $300 charitable deduction, whether or not they itemize or not. If you're retired, all required minimum distributions of your retirement payouts are waived for 2020. Why is that important? Some of you have significant stock portfolios that the last thing you want to do maybe is to sell that right now, pending the turnaround of the economy. Another one that is very important, we can take out loans or withdrawal from our retirement accounts up to $100,000. If we do not take a loan and instead take a distribution, that will be penalty free. Normally there's a 10% penalty on early distributions. That is being waived. The requirements are that you will either pay that back ratably over the next 3 years, or if you do not want to pay it back, you will recognize it as income over the next 3 years. So for example, if you took out $30,000 of your retirement to deal with things, bills that you need to pay right now, then you can do that penalty free and either pay it back over 3 years or just recognize it as income, $10,000 in 2020, 21, and 22, so you can spread it out during that time. And I would imagine that you would have the option of also accelerating that in years that you have a lower income. Now, individuals in collections. Some of you have installment agreements or offers in compromise. Installment agreement payments are going to be suspended during April, May, June, and all the way up to July 15th. The IRS has taken some unprecedented steps in order to prevent collections activity, liens, and levies from reaching people who may be in a time of financial crisis right now. And following that, that means that there are no new audits that will be taking place during this next 3-month period, or at least between April and July, and all new liens will be placed on hold. Now, moving along to the self-employed independent contractors. There are a number of interesting provisions here as well too. Self-employed individuals have to pay both their own and the company's Social Security tax because they're both the boss and the employee. If you ever get angry at yourself and you're self-employed, or you get angry at management and you're self-employed, just go look in the mirror because you are the boss. But anyway, that's a 12.4% burden for those that are self-employed or as a business owner. Social Security taxes can be postponed for now, and of course guidance on this is forthcoming. Unemployment benefits have now also been expanded to include self-employed individuals, business owners who are affected in their income by the COVID pandemic. The methodology with this is that you contact your state unemployment commission or whatever division handles that. There are also loans that are going to be allowed by the Small Business Association. They are called payroll protection loans. These are significant amounts that can be given to small business or self-employed individuals, primarily to protect the wages of those that you employ. And there is a provision in which these loans will be completely forgiven. I do not want to go into immense detail on this, but suffice to say this is one of the provisions that are allowed. Now finally, regarding businesses, and some who are self-employed are actually own corporations or some other kind of entity in which they conduct their business through. As I mentioned already, the Small Business Association loans, the payroll protection that is designed for. Employer payroll taxes are being postponed, and there are other provisions for employee retention credits of up to $10,000. Basically, there is a 50% credit on all wages that you continue to pay for any employee that's affected by the COVID pandemic who is not able to work or otherwise quarantined. That is a lot. And as always, if you have any questions, feel free to email us. We are taking a lot of phone calls, but if it can be done by email, that would be good as well too. The IRS also has an FAQ page regarding this, which I will have on my blog shortly, and also tomorrow on the website we should have this as well as the state deadline PDF available too. So watch for updates as things develop. We will post more. In the meantime, do whatever you need to do to stay safe, get lots of sleep, and pray for one another as we continue to battle through this unprecedented time of history. So for now, have a good afternoon and good night wherever you might be. Talk to you later.